Hey, what's going on, guys? It's going to be the Sunday breakdown for futures and SPY. It's December the 30th. We're going to start with natural gas. Natural gas gap down. I kind of expected this. DGAS has been uptrending, which is going to be the bear for natural gas. We had a consolidation point here, and we were close to the support area on Friday, and I didn't think it would hold, and we gapped down. So I kind of expect a gap fill, and the gap fill mark is going to be around the 330 range. If we can break this, so this is your 200 moving average zoomed in, and then this is your EMA. This is your 20 and your 50. So if we can get past the 20-day EMA, I think we're going to start moving up to close this gap fill. Now, we could start to see an uptrend for you guys, and the reason why I say that is if you go to the weekly chart, we're currently at a support for the smooth moving average. So if you guys are going to have another run this year, I think we're at a really, really good spot for that to happen. But in saying that, I will be waiting for an uptrend. I'm not going to get in time in the bottom because you want to, there's 3 steps to a reversal. You got the downtrend, you have a consolidation area, and then you have the uptrend. So you want to invest your money whenever it's going to grow your account, not whenever you're guessing. So we're going to be seeing if this smooth moving weekly average holds as a support, and you guys has another uptrend during the month of January. So it's kind of what I'm going to be looking on that. And then gold, last week I called it as a breakout. You could play some gold ETFs and whatnot, and as you can see, we had broke out of this channel, and look at that week that it had. We went from 1260 to 1282, so $22 an ounce. So we had that right on the number. We're currently at a resistance area. You can see, like, whenever it generally gets to a resistance area, you normally have a weak consolidation area or pullback or something. So if I had to guess, we're probably in a slight consolidation area to let this recover, this EMA line recover, and might consolidate for a little bit and then get a bounce on this EMA line. Moving on to silver, very similar week. It broke out just like gold did. As I mentioned before, metal commodities, especially silver and gold, generally will trade the same. And I mentioned last week that it was above the weekly EMA, and we should start seeing uptrend. And that's exactly what happened. So let's say, for instance, this week you saw that happen and you want to play a bull silver commodity. So USLV is one. Let's zoom into the last 10-day stretch. Okay, so this was the breakout, and it would have been 16%. So if you would have got in USLV last week, you'd made a 16% return on silver. And U-Gold is a bull for gold. U-Gold is a bull for gold. It offered a 6.6% return. So definitely looks like silver would have been the play last week. JNUG is a gold miner bull ETF for gold. So that was 20%. Wow. So it's had a slight pullback right now, and we're in a consolidation week. So this don't actually trade exactly like gold, but generally the directions remain the same. You just, if gold's uptrending, you know, JNUG might not be uptrending. It may be in a consolidation. So it's considered a gold miner ETF. And although they do track similar, since gold hit bottom, it's had a reversal. JNUG is up 48% or roughly 50% from the lows. And then what else we got? Crude oil. I don't know if you remember or not, I called 42 an absolute bottom last week. So this is what I saw, and the reason why I thought 42 would be an absolute bottom. Had a lot of buyers in this area 3 different times, and it looks like we've had a bounce. And honestly, looking at the previous history, anytime it's bounced on the 42, we've started an uptrend in the next month. We normally went up, went down. We consolidated underneath the CMA, and then we had a breakout. So I apologize if my mic's a little bit low. I need to speak up, I guess. All right, so this EMA line, because of this huge drop off, is going to need some time to catch up. So we're probably going to move up, but we're not going to move up that we could move up quick, and it could just bounce and get rejected and make a big climb back down. But we're going to need a consolidation area underneath this EMA, I do believe. This bounce here, it really didn't. It went up a week, and then it busted through for a week, and we come back down and kind of confirmed it for several weeks, and we uptrended again. So we are at a very low bottom, and it's almost January, so we always know that gas prices during the summer months, it's going to be up there. So we're going to have to see an uptrend and start heading up towards that $70 level by summertime. So I think this, I'm going to set my alert. Let's see. Just to be on the safe side, I'm going to set it for 47. I'm going to have to move myself out of the way. I'm going to set it for 47.50. That way I know it's quite a bit above the 50-day moving average. And there we go. Okay, and so that's going to be the breakdown. Let's see, now we got SPY left. Okay, so SPY, we are at the start of a bear market. We pushed down for like 10 straight days, I think it was. And then we've had a slight recovery back up to the 20 and 50-day moving averages. I've actually got one put on SPY right now. So what I would expect it to do is, or what I'm hoping it to do since I'm invested in it, is we come down here and make a double bottom, or we break this support and make a lower low. Now, it could also make a higher low, and if we make a higher low, we're looking at another uptrend. So because it's the first hit on the 20-day, and let me zoom back out. It's really pushing that. I hope it gets rejected anyway. I really didn't expect it to keep going up there, because anyway, I still believe we're headed back down in the next week or two. We need a double bottom here, and then to hit this 20 and 50-day moving averages again to see if it can bust through. But overall, I don't think we've seen the bottom. I don't even think we're nowhere near the bottom, honestly. our fake economy with a $22 trillion debt, and it's just a huge bubble waiting. So well, if I can get my tool out, I just want to draw a line. Draw an uptrend line to kind of like go through the bottoms, smooth moving bottoms, and kind of see before we went on this like really bull run, like where we would be at. And I said months ago, so this right through here would be if we hit these levels right here, we'd be looking at a 55% retracement, which would be a classic Fibonacci retracement area for a bear market. So this is the first time I've drawn this line, but it falls right in line with a I don't know if it'll do it right on this or not. Maybe. So let's go up here to the high, and I'm going to have to start here at the bottom. So let's just say we make the bottom right through here. 152 to the high. That's 48%. What is going on? Anyway, that's like right there at a 50% retracement. I got another one up here. Let's see. This is the S&P 500 E-mini futures. Oh wow, it goes all the way back to 1996. So let's do a similar line. That'd be about the bottoms. %. Pretty close. I think that's what we could be looking at. We've been on an excessive bull run. It wouldn't shock me at all if we had a 50% retracement. It falls in line with the other bear markets in history, and since we are $22 trillion in debt, and we have a lot of financial problems in the federal government, and a continuation of a $1.2 trillion deficit on a yearly basis, coupled with whenever we do go into a bear market, unemployment is going to increase dramatically from 3% upwards to above 10%, which is going to have so many problems. So one of the problems will be unemployment. So the federal government is going to be paying out unemployment, which is going to add to the deficit, along with the dollar being weaker, which is going to increase our interest rate because the dollar is not worth as much, and you know our debt compared to other countries, the dollar is going to lose value because they're just going to print more money to try to get us out of this hole, and it's just a continuation cycle. I mean, honestly, at the end of this, you're going to have to get away from the dollar and go back to either the gold standard or a new type of currency where the federal government can stay in check. You know, where the federal government is continuing to spend trillions of dollars, and I think it was just several years ago they took over $1 trillion from our Social Security. It's just a continuation of crooked government. You want to call it crooked, but our politicians should keep the country financially stable And we as a country with 350 million people shouldn't be $22 trillion in debt. We have the biggest economy in the world, and we have a $4 trillion a year revenue, a GDP of bringing in over $4 trillion a year. There's no reason for our federal government to be in a $1.2 trillion a year deficit. So that's my pet peeve with that. It's the federal government's fault for putting us in this future recession. They pumped up the market to where it is now through printing fake money and giving $1 trillion to the big banks, and then the big banks provided liquidity for the market. Had started this bull run back in 2008, 2009. But now we're at a point now where that money was supposed to be spent on small business loans and stuff like that, and I think there was issues with that where that didn't happen. And it's just big politics, and people let money get in their head. Instead of doing what's right for 350 million people, they do what's right for them, and I don't like it. But there's nothing we can do. The only thing that we could do as a people is stand up together, and one day it's probably going to come to a head, and millions of people stand up and say we're not going to take it anymore. But until that happens, the federal government's going to keep doing what they're doing. So it's going to be the weekly breakdown, and sorry for my tangent. I went on a little rampage there, but I just my credit score is over 770. I've always took pride in my finances, and I don't have credit card debt, and it's just certain things that you do to, maybe I don't live extravagant, but I live within my means, and we have a great life. And it's because over the years I've taken pride in my finances and know what money is there for. And our federal government they just don't care. They just spend. I mean, you look at Russia, which is the number 2 superpower in the world, and they have like a $50 or $60 billion. They have like a $50 or $60 billion a year military budget. It's 50 to 70, somewhere through there, billion. And here we are within Trump took office, and we had a $770 billion military spending bill. Why do we need to spend 15 times more than the second superpower? Now, I know military is important, and you want to protect us in case anything happens, but the amount of money that we spend on military compared to all these other countries, when all we got to do is get along with them, I don't know. Anyway, that's going to wrap up the futures breakdown, and I'm going to have to get quicker at these videos because I go on rampages, and I don't know. Yeah, y'all may like it because I feel you full of a lot of information, but maybe you just want me to speed through the futures and you get the information that you want to get. I don't know. Let me know in comments if you like how I do the videos, if you would like the futures quicker or whatnot. I'll try to make adjustments according to what everybody likes. So hope y'all have a green week and a start of the 2019 first week of the year. Let's start on a green note and continue that going forward. I want everybody who watches these videos to have a lot of great information. That way you can use it and become profitable. And natural gas is pumped up to 313.2. So it is pushing that top VWAP for sure. There it is. And so other than that, hope y'all have a happy new year. I guess that's tomorrow night. And I look forward to speaking with y'all on the next video. Just like always, I love doing these videos, and I love the community here on YouTube. So y'all be careful tomorrow night. Make sure you don't drink and drive. It's more important to get you a taxi or something. I don't want y'all to be involved in any wrecks or anything like that and hurt yourself. So We will see y'all on the next video. Don't forget to subscribe to the channel, hit the like button, share the video if you're in, if you want to, whatever. But and hit that bell notification, and we will see you on the next video. Take care.